Is the volatility smile always a smile? Have you ever wondered if the volatility smile in options trading is always shaped like a smile? Let's break this down together. The term volatility smile suggests a U-shaped curve. This curve shows how implied volatility changes with different strike prices. Ideally, if markets were perfectly efficient, this curve would be flat. This means all strike prices would have the same implied volatility. But in reality, that is not the case. When we look at the volatility smile graph, we see that implied volatility is lowest at the money options. As we move towards deep into money or out of the money options, implied volatility rises. This creates the classic smile shape. However, this shape can vary quite a bit. Sometimes you might see a symmetrical U shape. This is the classic smile we often refer to. Other times you might notice a skewed shape, often called a volatility skew or smirk. In this case, implied volatility is higher on one side, usually the put side for equities. This reflects a greater demand for downside protection. The shape of the volatility smile also depends on the underlying asset and current market conditions. For example, equity options in the United States showed little to no smile before the market crash in 1987. After that event, a pronounced skew developed due to increased perceived risk of extreme downside moves. Understanding the shape of the volatility smile is important for traders. It reflects market expectations of risk and tail events. A steep left side indicates fear or bearish sentiment. This means traders are willing to pay more for downside protection. Conversely, a steep right side suggests bullish speculation or expectations of upside moves. So, why is the volatility smile not always a perfect smile? The answer lies in real market dynamics. Supply and demand, along with investor behavior, can cause the shape to change. Sometimes, it may look more like a skew or smirk rather than a neat U shape. In summary, while the volatility smile is a useful concept for visualizing how implied volatility varies with strike price, it does not always take on a literal smile shape. Traders need to interpret this shape in context, as it often reflects market sentiment and risk perceptions.